So a lot of people have been asking me, how do I trade? What do I trade? How do I manage positions that go wrong? And you know what? I thought about this and I'm just going to show you live how I trade. Now, this is going to be a series, so make sure you subscribe. We have a account that is funded, and this is not a demo account because those of you who have used interactive brokers will know that you have this massive line that goes across the bottom and that says this is a simulated account. So this is a live account, and the total cash in the account is $4.5K. And we do have 1.19 shares of IBKR, and that is because someone has used my affiliate link and they would have got some IBKR shares. I got some IBKR shares, and we don't need to worry about it. But B, if you want to get on Interactive Brokers and if you want some free money, click the link down below if you want to open an account with Interactive Brokers. Like I said, I'm going to take you through everything. I'm going to try my very hardest to do all the trades live, whether it's on my mobile, whether it's on TWS, on the desktop version, or on my iPad, as I've got here. I want to make sure you guys are seeing everything, all the new trades, all the adjustments, all the rolls at 21 days, so you guys get a full picture. So again, if you're not subscribed and you want to become a profitable options trader, I'm going to show you guys how to basically do it absolutely free. The key thing to realize with this account is the excess liquidity. And I go into the detail about margin trading in my margin trading series, which I'll link into the pinned comment. But effectively, your excess liquidity is your equity to loan value minus your maintenance margin. Now, your equity to loan value is your cash, your 4.5K, plus the amount in your portfolio at the moment. And your margin maintenance is up here at 27.74. And the reason why that is, that's the margin requirements to hold these 1.19 shares of Interactive Brokers. Whenever you place a trade, and when you see this in Interactive Brokers, when we go through it, you'll be able to see what happens pre and post trade. So you can make sure that you're comfortable placing this position. So this is what we're going to do in terms of how aggressive I'm going to go aggressive as I can while still not being stupid. So I'll only be doing one contract, and the trade that I'm thinking about doing is on Riot Platforms. Riot Platform is a blockchain mining company, very volatile, moves with Bitcoin. And the only thing to consider with that stock is you need to put up 100% of the capital, even though you're trading inside a margin account if you're selling puts. And the reason for that is, again, due to the volatility. So if you're selling puts on it, it's like you're doing a cash secured put effectively on Riot. So that is going to eat up a lot of my buying power, but I'm going to try to do it as good as possible. We're going to talk about different things in this challenge around IV rank and all of these different things. But for now, I just really want to just get a trade on the board and show you guys how I do it and what I do. So if we go to trade, and then we go to Riot, so you can see Riot is currently trading for $11.48, up 3.7% on the day. And we're going to go to options and spreads. And what that does, it brings up the option builder. So if we go to the July monthly cycle. So I like to sell options on the monthly cycle, which I can either pick July 21st or I can pick June 16th. And the reason how I know that these are the dates, because I do a lot of trades and I just know the dates by now. But you'll see there's a W on anything that's not a monthly cycle, which basically means it's the weekly cycle. So there's two reasons why I do this. One is it just makes everything a lot more consistent for me. So I know that every time I'm rolling a position into a new cycle. And the second reason is because, as most options traders, hedge funds, and all these good things, they also do the monthly options. So therefore, there's more liquidity, easier to get filled, less spreads. So you get better fills effectively. So that's why we do it. And the reason why I'm choosing the July cycle as opposed to the June cycle is because I like to do opening trades between 45 to 60 days out. If you look at the theta decay curve, it's 45 to 60 is about the right time before it starts to exponentially go. I used to do weeklies. I don't do weeklies anymore. It's because of the gamma risk. I'm taking 8 times more the risk to only get an extra $20 by doing weekly versus doing a monthly cycle. So again, that might sound a bit complicated to people that are new, and we'll try to go into all of these things in this video as this develops. June 16th, it's less than 45 days. And therefore, that's why I'm going for the July the 21st. So we've got puts on the right, calls on the left. And what we're going to be doing is selling a short strangle. So a short strangle is selling an out the money put and an out the money call. Again, two reasons why I like to do this. One, you collect more premium by selling both sides. That's the first thing, for the relatively the same amount of kind of buying power or margin maintenance, which we'll look at. And then secondly, I like to be as delta neutral because no one can predict if the market is going to go up, let alone if right is going to go up or down in the next 56 days. So I'd rather hedge myself on both sides. So looking at this, I'm going to go for around the 15 delta on each side. So we've got delta here. Delta is, there's many different views on what delta is and the definitions, but for this example, we're going to go with the probability of being in the money. So there's a 15% chance or 14.5% chance Riot will close below 8 at the date of expiration. Now, we're going to manage a lot earlier than the date of expiration. I like to manage 21 days before. I'm not looking to get assigned any of these shares. I'm looking to trade the stock. So you see here, the bid and the ask between 49 and 52. So if I was to just sell this put, it's $52 of credit. And now what we're going to do, we're going to do the same on this side. And again, you notice I'm not looking at any charts. I'm not looking at any trend lines and various other things. I'm purely going to be doing this on delta alone. So you can see here, I'm going to do the 17 delta. I don't think Riot's going to go up $9 anytime soon. And yeah, I'm just going to do that. And what you'll notice here is if you look at the price of 11.5, there's a lot less gap than to the upside. We've got about $9 gap here, and we've got about $4 gap here. And that is what's called skew. So this is got call skew, meaning that where the options are trading is the options pricing are telling you is that there is more bullish sentiment in there. Does that mean it's going to go up? Don't know. Does it mean it's going to go down? Don't know. It's just what the way that the options pricing are at this current point in time. So again, we're doing the 17 delta at the $20 strike and the 8 delta on the put side over there. So my total credit is 90 cents. So 100 shares or one contract is $90. And you can see here, this is now the range. So I need Riot to stay in this range for the duration of this trade. So if we go onto the order page, and what I'm going to do is click on performance details. So performance details here is going to tell you what my max return is. This is an undefined risk trade. So I could go all the way up or all the way down to zero and I will lose my whole account, but we'll go on to those things when things don't go our way. But the bit I'm looking here is the probability of profit. And what this is saying is that at the date of expiration, there's an 80% chance that Riot is going to stay between 8 and 20 before the date of expiration. So I like to look for high probability trades, and that's what we're looking at here. Now, if we look at your delta, gamma, and theta, the bit I want to concentrate on is the delta. So my delta is -3. So the closer to zero, the more delta neutral you are on this position, i.e., you just need Riot. You're not bullish or bearish on either side. So I'm fairly flat in terms of my deltas. So that's that bit there. That's all I really want to go through there was the probability of profit. And then now what I'm going to do is see what the mid price is. Mid price is at 93. So we'll do that. Now, before I hit select to submit, I'm going to go on preview. And what preview does, this is where it tells me the information on what's going to happen. So my equity to loan, which is my cash plus my portfolio, i.e. the IBKR share, is going to go up by $90, which is the credit. Even though I'm asking for 93, when we take commissions into account, it's around $91. So it's saying that I'm going to get plus 90. So post trade, my equity loan is going to go up to 4,689. Now, initial margin is going to go up by 1,719, which means that amount will come off and a little bit more off my buying power, but I'm not really fussed about buying power at this point. The one I want to concentrate you guys on is maintenance margin. The maintenance margin is the cost to carry this trade or the margin required to carry this trade. So it's 1,143. So plus the $27 we had at the beginning, that's how much margin we need here. Now to calculate your excess liquidity, you do your equity to loan, which is 4, 6, 8, 9, minus 1173, which is margin maintenance. So my excess liquidity, which is currently sitting around 4.6, 4.7K, will drop to 3.5K. So once we place this trade, we'll have a look at that. If I remember, 3.5K. So I'm going to slide to submit this order. That's fine. The order is pending, so it's now submitted. Perfect. I had to play around with it, but I got filled at $89. And now if we go back to the portfolio screen, you will see here that I've got this short strangle, the 820 strangle. And again, you can see my excess liquidity has dropped to 3.5K, which is what we predicted. So this is the bit that I need to watch out for. I can't let this go to zero. That's all you need to know about margin trading is don't let that go to zero, and make sure you're not trading so many trades that you can't let trades go against you. Now, how am I going to manage this position? So what I'm going to do actually is change around these columns. So at the moment, this is down by 4.8%, be down to spread and various other things. And all of these things, I did try to get filled quite quickly. So I'm probably down by quite a bit. So what we're looking for here is I like to manage my winners early and close out of positions around the 40 to 50% range of max profit. So as days go on, theta will take its course. I think the theta number was about $2 a day. And again, depending what happens with the price as well, that will also affect the theta number. But what we're saying is I have collected $87 net post commissions, that if this gets to around the $40 mark, I will look to close this position out. And that's what we're going to look here. So this is why I like to have the percentage section here. It's very easy. So if this was up by $40, I don't need to work it out. It's quite straightforward to work out. That is a 50% gain or a 40% gain. And again, I'm not looking for it has to be dead on 50. So the question that everyone's going to be asking is, what if Riot jumps up to 20 next week or jumps down to 8 next week? Now, it's very hard for me to show you what I would do without that position actually happening. But effectively what we do is, let's say that Riot jumps up to 20 and touches my call strike or touches my 20 call. If that happens, what I do, if you just think about it from what the price of the option is, the price of this Riot option will jump up to $3, $4 or something silly like that. But this option here, the 8 put, will be worth a few pennies. So what I would do is roll up what's called the untested side. So my call has been tested. I'm going to roll my 8 put up and bring it up closer to the current price. Not only create more credit, but also to flatten my delta, because now my deltas will be out of the whack. I've done the 17 on the call side, 15 on the put side. Think about what happens to price when your deltas change. And again, that's all I'll leave it to at this stage. But if all things go well, I will close this out around 40 to 50% of profit, and I'll redeploy that capital again, or depending on what I want to do. So at the moment, there's not any other trades that I want to do. I just want to do that opening trade. So we've got a 4.5K account. We've done something. We've created $87. I'm looking to keep around $40 to $45 of that. And I'll just keep doing that. And that's all I'm doing. And it's very easy to manage these positions. So make sure you like and subscribe. Again, we'll go through this in more detail as time goes on. Hopefully I am tested so you guys can see what I'm doing. And I'll try to do other videos on my other accounts so you can see what I'm doing here to manage these positions. And I should see you guys in the next video.